Hi guys, welcome back to my channel. So in today's video, I'm going to go through the trend trading strategy and how you can potentially apply trend lines, whether you're a swing trader, day trader, or scalper. I'll go through some of my tips and tricks on how to apply trend lines, what time frames to apply them on, and how you can potentially capitalize off of trend changes or trend line breaks. I know for the most part, you guys have seen most of my videos are breakout trades. Over the past several months, I've really been kind of honing in on trend line breaks and potential trend changes in order to be able to capitalize on that. As the market continues to change, you can't really just be stuck on one strategy, and I've really learned that over the past couple of years. So I've always kind of been open to trying new strategies and seeing what works in the current market conditions. So I'll go through that with you guys as well. And yeah, let's just go ahead and get started. All right, so before we get started, I realized that putting both of these topics into one video would make it too long, so I'm going to split this into two videos. The first video is going to be how to draw trend lines and what you need to look out for to identify trends. The second video is going to be trend line strategies, how to play those trend lines that you plot. So they'll be posted back to back, so you guys don't have to worry about that. But this one is the first one up. I'm going to show you guys how to draw trend lines and what to look out for. These are just some tips and tricks that I've learned over the years, what I've read in books, and then as well as my own personal trial and error applying trend lines and so on and so forth. First thing that you want to do is identify the time frame that you're looking to plot the trend line on and potential entry points. So whatever time frame that you're plotting the trend line on, that should be the time frame that you actually take entry. So if it is a higher time frame, you will look for a swing trade or day trade. Lower time frames, you would look for scalping and sometimes day trading as well, depending on what time frames that you're looking at. So for me, on higher time frames, I know for a lot of people what I've seen is they use at least 3 price swings, which means at least 3 touches on it to be a valid trend line. For me personally, I do it a little bit different. To each their own. This is just what has worked for me. If you are looking at a trend line on a higher time frame, I do look for 3 touches. The more touches on a trend line, the stronger the trend line is. At least 3 touches would make it a significant trend line for you to be able to take a trade with it, or for you to be able to utilize it in a strategy. So at least 3 price swings on higher time frames. On lower time frames, and what I mean by lower time frames, in intraday time frames, so 15-minute, 5-minute, 2-minute time frames, if the trend line touches at least twice, if there's at least 2 price swings on the trend line, I do identify that as a potential entry, as a potential play for that time frame. So if the trend line has touched twice, there's 2 price swings, I do identify that as a significant trend line, and I would take a potential trend line break or bounce off of a trend line like that on those time frames. Parallel trend lines act as an area of support, so you can have 2 trend lines, and I'll show you examples of this as well. So you can have 2 trend lines right next to each other. The first one actually is the initial trend line that you plot, and then sometimes what the stock can do is it can break that initial trend line and then create a second trend line right underneath. This just becomes a kind of zone for the stock. So it's not necessarily a breakout of the trend line. The stock breaks out slightly, is not able to reverse the trend, creates a second trend, and then that becomes kind of a zone of support or zone of resistance for the stock, depending on if it's an uptrend or a downtrend. For a trend line, it's not as simple as charting support and resistance. It's a little subjective, and you always want to adjust your trend line as the stock continues to make the move up or down. It's just not that you plot the trend line and you're done with it. Sometimes you'll have to adjust the trend line depending on where you plotted it to make sure that it's continuously touching correctly. What you want to do is you always want to start on the left-hand side of the chart. I always start on the left hand no matter what I'm doing, whether it's charting, trend line, zone, support, or resistance, supply and demand. I always start on the left-hand side of the chart. For an uptrend, you start with the swing low. So the first time that the stock swings low, that's your initial starting point for a trend line, and then you connect it to higher lows. So every time that the stock makes a move, as the stock is making the move up, every time that it pulls back, that is a swing low, continues up, pulls back again, that's another swing low, and those are the touches on your trend line. For a downtrend, it's the opposite. You start with a swing high and you connect lower highs. So every time that the stock pulls back, that is your swing high, that's one touch. Pulls back again, so on and so forth as it continues that downtrend. The one thing that has really helped me with identifying trends and plotting trend lines is zooming out of the chart. So a lot of times because I'm usually scalping most of my positions, because I'm so in the screen, I'm not able to see proper trend lines. I wasn't able to kind of identify proper entry and exit points. So once I zoomed out, I was able to see the whole trend line from start to finish. It becomes a lot easier for you to be able to identify potential entry and exit points. And then be logical. Obviously, don't over chart your stock. This goes for even charting support and resistance levels. You don't want to have a million different trend lines. You want to chart what makes sense. If it makes sense, if it's logical, that is what you want to chart. You don't want to have a million trend lines, just like you don't want to have a million support and resistance lines. You want to chart what makes sense and what is higher probability on whatever time frame that you're looking at. And like I said, the more swings, touches on the trend line, the stronger the trend is. So let's go ahead and go through a couple of examples of this. Okay, so this is SPX's 1 year daily time frame. I'm actually going to go to the 3-year weekly because SPX is almost at yearly lows. So this is SPX's 3-year weekly time frame. So on the higher time frames, to get a overall picture of where the stock is and what type of trend it's on, I look at the weekly time frame and the daily time frame. Sometimes I'll look at the 4-hour as well. It's not as clean as the one year and 3-year, but the 4-hour is also a good time frame to look at broader picture of what the stock is doing. If I'm looking on an intraday level, I look at the 30-minute, 15, 5, and 2-minute. If I'm looking to day trade the stock, it would be the 30-minute and the 15-minute. If I'm looking to scalp it, it would be on the 5 and 2-minute. So those are the time frames that I look at. If I'm swing trading, I would obviously be looking at the weekly or daily time frames. So just starting from the left-hand side of the stock, I just want to show you guys what I would do. So here is the left hand. This is the swing low here. So we can see here, this is where the price swings low, comes down into a downtrend, creates a low here. This is where I chart. Now, you can chart the top of the wick or you can chart the base of the candle. It's really up to you. I personally chart the base of the candle, and then the bottom of the wick usually becomes that parallel trend line to where it creates a zone. So I like to chart the base of the candle. And as you make your way up here, so you can see here, stock, this is your swing low, comes down. There's a little bit of a pullback here, nothing serious. The stock continues up. This is your second touch right here, your second swing low, continues up. This is your third touch right here, third swing low. It's not until right here where it breaks the trend line and goes into a downtrend. Okay, so this is your swing low into an uptrend. That's your first touch. Continues up right here. It's in an uptrend here. So this is what your eye catches right at first, is this first trend line. This is your swing low all the way to the high of the chart. Now, this is what I mean by a parallel trend line. So if you look inside of this trend line, you can see that the trend overall is a little bit tighter than these 3 points. So if you look here, there's another swing low right here, and the stock swings low here as well. So this is really the point that caught my eye. It did pull back heavily here. It's not right at the trend line, but it did end up pulling back. And if you continue the trend up, you can see that it pulled back again right at that area, and then right here it breaks that first trend. Okay, so you can see this trend line, swing low, swing low, swing low. Right here breaks out, it creates that zone. So this is your zone in this trend line. Okay, so it tries, and I'm going to actually extend this to the right so you guys can kind of see. And again, you want to adjust whatever you have to. And if we just, whoops, let me just show you guys. Sometimes the extension doesn't work. And if we just extend this over, I just want to kind of show you guys. Like I said, trend lines, subjective. You have to kind of work with it. Okay, right here, swing low. Okay, second swing, third, fourth. On this fifth one, broke out, was not able to break the overall trend, pulled back here, created a second trend. This is the zone that I said, continues into this zone, creates that. Usually people look at this as a channel. So if I didn't have this extended to the left, this would be a channel. Creates a channel here. It's not until right here that it breaks out of that lower trend line, breaks out of the zone finally, and reverses into a downtrend. Now, just on this chart, you can see this is your swing high. Okay, oops, right here. One touch, two touch. Stock is now on a downtrend. Swing high, comes down, another touch, another touch. Three touches. This looks like it could potentially come back, touch the trend line again, and then reverse back down. So this is the daily play that I'm actually looking at on SPX. You can see that it is on a downtrend here. It has room to test the trend line all the way up to around 39.80 and then come back down. Okay. So one thing that I will say that as the trend continues down or up, you will have to adjust your trend line. It's not going to be perfect at all times. It's not going to touch perfectly, but it should, if you're plotting your trend line properly, it should touch pretty close to that trend line as it's rejecting that trend line or as if it's breaking that trend line. So this is the daily time frame on that same trend line. You can see nice touches here, 1, 2, 3. It's a little bit cleaner on the weekly time frame. That's why I wanted to show you guys that first. But overall, you can see that the trend is still down. It does make those big price swings back up and then reject. So you can take every bounce of a support or rejection of the trend line. Okay, and I'll go through that in the next video, but I just want to show you guys kind of how to draw it. And now if I look at, I'll show you the 4-hour time frame here. You can see that there's a slight trend on SPX to downtrend below this trend line. So if you look here and zoom in, this is your price high here. Okay, comes down, touches once, and here you go. So this is a trend within a trend right here, 2, 3 times, and the stock is continuing down. Now it's at this 4-hour trend line here. So what can happen is pulls, this is your swing high, comes down, pulls back, comes down, pulls back. Now we can potentially see a rejection on SPX back down to the support of $3,500. 3,500 on SPX. So if it does come down, it could go to 3,570 and then 3,500 on SPX as it's rejecting that 4-hour trend line currently. Okay, so just keep that as well in mind. And the one thing that I do want to say that is good to keep in mind and why we don't use trend lines just solely by themselves, you want to use trend lines in conjunction with your support and resistance levels. Once you learn to use trend lines with support and resistance levels, those are going to give you the highest probability setups. If a trend line also falls on a support or resistance level, it is a high probability setup. For example, if you look here, we have a little bit of resistance here where the swing high on that trend falls. And if we chart this, looks like it's the 4,300 psych level here. And you can see resistance here, resistance here, resistance here. This is when the trend starts, okay, on this resistance. So this is a high probability trend line. So if the stock is able to reject here, we can get a move back down to 3,500 on SPX. This is a high probability setup. So on the smaller time frames, I look at the 15-minute and 30-minute for day trading, and then I look at the 5 and 2-minute for scalping. So this is a 30-minute time frame on SPX. So starting from the left hand over, this is your swing low here. Right at the base of the candle, I don't chart the wick. That's just how I personally do it. I chart the base of the candle. This is just swing low. First touch, second touch here, drags along the trend line, comes back on that fourth touch, it breaks the trend line. Okay, once it breaks that trend line, it creates another trend here. Breaks, creates a support here at around 36.55. Now, once it holds that 36.55 support, ends up holding it and then going back into an uptrend, there is a slight trend here that it ended up breaking out. I just personally didn't like it because the breakout actually happened after hours when SPX gapped down. So it did have this trend line up. You can see swing low, 1 touch, 2 touch, and then right here it held. And then at open, SPX ended up breaking that trend. And if you extend this to the right, you can see that it retested the trend line and then made the continuation down. So that's one thing that you'll see is if it does break the trend line, sometimes what will happen, especially if it's on a little bit of a higher time frame, it tends to retest the trend line and then continue the trend back down. So the trend line can actually be used as a resistance level if the stock breaks it, because if it does make a move back up, it usually tends to retest the trend line on the move back up and then continue the move down. So when I'm scalping a stock, it really depends. what I really like to look for before the day opens is I'll open the stock up on the 5 and 15-minute time frame, and I do like to look for trends that it could potentially be on over the past couple of days or over that week. And you can see right now that after SPX broke that 30-minute trend line to the downside, retested, rejected, and then continued down, it has now created another trend down on the 5-minute. Just adjust this. This right here. So it has created another trend on the 5-minute here. So going into tomorrow, I would expect SPX to continue to hold the trend down unless we have some significant news to where it could break the trend. Now, when I'm looking on a day-to-day basis for a scalp on the 2-minute, obviously I would look at just for that day. So if I'm looking at the 2 and 5-minute, I'm only looking at it for that day. For the 15-minute and 30-minute, usually the morning before, I look at what it's been doing over the past 5 days. So on the 2-minute, I'm obviously looking to scalp the stock or potentially day trade it for a few minutes. And I only look at for that day. So if we look at SPX here, you can see that it created a swing low here for this day. And this is actually a trade that I took on SPX and posted on Instagram. So you can see here, swing low, first swing, I'm pointing at the screen, first swing low here, first touch here, second touch here, right here, 1, 2, 3 here. It breaks out on this fourth touch here, creates a high of day, breaks out, retests the trend line, and then comes back and continues its downtrend. So this was a nice trend line break. So this one was a very high probability trend line break for a scalp on SPX. Now let's take a look at, say for example, Tesla. So again, for the 2-minute on Tesla, I would look for the same thing. If we can let's just zoom in on this day here and I'll kind of show you guys. So it was on an uptrend here. Then right here, it creates a swing low, okay? And you can see as you drag your trend line up, swing low on this uptrend, pulls back, first touch, second touch, third touch. You can see it pulled back multiple times here. It's in a sort of consolidation here right on the trend line. Was not able to break below, pulls back again, and then right here ends up breaking the trend line, okay? High probability scalp here on Tesla as it breaks the trend line into your next level of support. And then you can see here, if we extend this to the right, it tries to retest that trend line and then makes the continuation down into a reversal. So high probability trend line here on the 2-minute as well. For the higher time frames, it's the same concept as I showed you guys on SPX. You look for a swing high into your lows. Right now, overall trend on Tesla is a downtrend. So you can see here, tested this trend line. So we have your swing high, second touch, third touch, fourth touch here. Tesla rejected, could potentially come back, retest the trend line, or just continue down before it comes back and swings back into that trend line. So same concept you want to apply to all of the stocks that you're trading and even futures when you are charting trend lines. So now that I've shown you how to draw trend lines and you can see there's no studies on my chart, I do want to show you the trend lines with the studies. So I want to add my EMAs for you guys so you can kind of see how they work. Now, the one thing that I will say, this is a great way to gauge trends and trend lines. Your EMAs are going to be really helpful to help you determine the trend, help you determine if you're applying your trend lines correctly, and so on and so forth. So I really like to use EMAs in conjunction with my support and resistance and my trend lines to be able to identify high probability setup. So I've applied the 9 and 21 EMAs. Those are the ones that I like to personally use whenever I am trading, whether it's day trading. Usually I use the 9 and 21 when I'm day trading and scalping. I use higher EMAs when I'm looking to swing trade. And just looking at the EMAs here, you can clearly see this was the, actually let's go to SPX's 30-minute. So I had shown you guys SPX's 30-minute trend line that we drew, and you can see here on the 9 with the 9 and 21 EMAs, this is your swing low here. You can see very clearly how the trend line holds. Okay. So you can see that the trend The inner trend holds that 9 EMA really well, but then the swing low also holds that 21 EMA. It's not until right here where SPX gaps down in the morning, breaks below and gaps below the trend, retests that trend, and then continues back down. So I think the 9 and 21 EMAs, or any EMAs you utilize, they are used to find, they're moving averages, so they're used to find trends. So that's literally what they're used for. And I think they're amazing to utilize if you're starting to get into trend lines, or you just want to learn how to plot trend lines. It's really, really nice to kind of already see where the trend is and be able to chart the trend line on top of it. And you can see how clean the trend line falls right on top of that 21 and then 9 EMA as it gets tighter until it breaks below and then continues its downtrend. And you can see when the stock is trading above both of your EMAs, it's an uptrend. If the stock is trading below both of those EMAs, it is a downtrend. So this is SPX's 2-minute, and if we see here, here's your swing low, pulls up, breaks that trend line. So we get 1, 2, 3 touches here, breaks that trend line, and so you can see how nicely SPX trends above the 9 and 21 EMAs. When it does come down to this swing low here, it touches that 21 EMA and my trend line. So this is a good signifier that I've set my trend line properly, and then bounces and continues up. This is also a great way to catch potential opportunities, trading opportunities while using trend lines. So definitely recommend, if you're newer to trend lines, use your EMAs, any moving average that you're comfortable with. They are used to plot trends, so it'll make it a lot easier for you to gauge that. Alright guys, so that's it for today's video. Thank you so much for watching. If you have any questions, comments, or concerns, if you have any video suggestions, you can go ahead and comment them down below. All of my social media links are also linked down below, and don't forget to like and subscribe to my channel, and I will see you guys in the next video. Bye!